The bank smiles at you when you walk in, but that smile means something completely different, depending on how much money you have. And today, we are going to show you exactly what that difference looks like, from $0 to 25 million, before we get to the top. There is something that happens at the $100,000 level that most people never notice. A quiet shift, a moment where the bank stops seeing you as a customer and starts seeing you as something else entirely. We will get to that moment. But first, let us start at zero. Level 1, $0 to $1,000. You walk into the bank with nothing, not literally nothing. You have enough to open an account, maybe $25, maybe $50, the minimum they will accept to let you exist inside their system. You get a debit card, a routing number, a welcome letter that uses your first name like you are already friends. You are not friends. At zero, you are what the bank calls a liability account. You cost them money to maintain, the software that tracks your balance, the customer service rep who answers your call, the ATM you use twice a week. All of that costs the bank money, and you are not generating enough to cover it. So they charge you monthly maintenance fees, minimum balance fees, overdraft fees, $35 every time you spend $1 more than you have. The average American pays $250 a year in bank fees, not because they are irresponsible, because they are poor. And being poor is expensive. At zero, the bank is not your partner. It is your landlord. And the rent is due whether you can pay it or not. Here is the thing nobody tells you about bank fees. The banks made $15.5 billion in overdraft fees in a single year. Not from wealthy customers, from people who were already struggling. Keep that number in mind as we go up the levels, because the contrast is going to make you angry. Level 2, $1,000 to $10,000. Something small changes when you cross $1,000. The fees get quieter. You qualify for a basic checking account with no monthly fee. The bank stops charging you just for existing. But do not mistake silence for generosity. The bank has simply recalculated your value. At this level, you become useful in a different way. You are now a potential borrower. The bank begins watching your behavior, how often you overdraft, how regularly your paycheck arrives, whether you save anything at all. They are building a profile, not to help you, to decide how much risk you represent the day you need something from them. You apply for a credit card. They give you one. $500 limit. 22% interest rate. They call it a starter card. What it actually is a test. They are seeing if you pay on time, if you carry a balance, if you are the kind of person they can make money from slowly. At $10,000, you are not a customer yet. You are an applicant, still being evaluated. Level 3, $10,000 to $100,000. You have crossed 5 figures. The bank notices, not with a phone call or a letter, but with an algorithm. Your account gets flagged, not as a problem, as an opportunity. You start receiving offers, a better credit card, higher limit, lower rate, a personal loan pre-approval, an invitation to open a savings account with a rate slightly above the national average. None of this is charity. The bank has simply decided you are worth investing attention in. At $50,000, you qualify for a relationship banker, not a teller, not customer service. A specific human being whose job is to keep your money inside their bank. They remember your name. They call you on your birthday. They offer you financial planning sessions, free of charge. None of that existed when you had $500. At $75,000, you can negotiate interest rates, fees, mortgage terms, things the bank told you were fixed when you had less money. Suddenly have flexibility, because the bank wants to keep you, and keeping you is now worth something to them. Pause. Everything you just heard, the fees disappearing, the relationship banker, the ability to negotiate, none of that requires a law change, None of that requires a new policy. The bank could offer all of it to the person with $500. They choose not to. Because the system was never designed to help you build wealth. It was designed to extract value from the people with the least and protect the wealth of the people with the most. Now, let us see what that looks like at the very top. Level 4, $100,000 to $1 million. This is the moment we told you about. At $100,000, the bank stops seeing you as a customer. You become a client. The language changes. The meetings change. The entire relationship changes. You are assigned a private banker, not a relationship manager. A private banker. Someone who handles fewer than 50 accounts, who responds to your messages within the hour, who comes to your office if you prefer. At this level, the bank starts paying you to keep your money with them, not the 0.01% they offer to everyone else. Real rates, negotiated rates, sometimes 3 to 4 times the advertised rate. Your mortgage gets approved faster, at better terms, with less documentation than someone with half your wealth would need to provide. You get access to financial products that are not advertised anywhere, not on the website, not in any brochure. Products that exist only for people who already have enough money to not need them as desperately. At $500,000, the bank invites you to events, private dinners, investment briefings, introductions to people who can make your money grow in ways that are not available to anyone earning a salary. The bank is no longer a service. It is a network, and your wealth is your membership fee. Here is the number that changes everything. $1 million in a private banking account generates enough fee revenue for the bank to justify assigning a dedicated team to your financial life. A team, not one person. A team. While the person with $500 waits 45 minutes on hold to dispute a $35 overdraft fee. Same bank, different universe. Level 5. $1 million to $25 million at $1 million. You cross into private wealth management. The branch disappears. The tellers disappear. The hold music disappears. You have a direct line, a direct number, a direct human being available to you during and after business hours. At this level, the bank is no longer holding your money. It is deploying your money. Your wealth manager is actively looking for places to put your capital to work. Bonds, private equity, real estate funds, investments that are legally restricted to people above a certain net worth threshold. What they call accredited investors. The bank becomes a gateway to a financial system that most Americans do not know exists. At $5 million, you move into ultra-high net worth territory. The products change again. The team changes again. The conversations change again. You are no longer being sold financial products. You are being presented with opportunities, co-investment deals, private placements, early access to funds before they open to the public. At $10 million, the bank calls you, not to sell you something, to ask what you need. The entire relationship has inverted. You walked into the bank when you had nothing. Now the bank comes to you. And at $25 million, you do not have one bank. You have 3, each competing for a portion of your assets, each offering better terms than the last to earn or keep your business. The bank that charged you $35 to overdraft when you had $400 in your account is now offering to waive every fee you have ever paid, retroactively, as a gesture of goodwill, as an apology almost, for how they treated you before you had enough to matter to them. The bank did not change. The rules did not change. The only thing that changed was the number in your account. And that is the most important thing to understand about the financial system you are living inside of right now. It is not designed to be fair. It is designed to reward those who already have and extract from those who do not yet. Knowing that is not enough, but it is the beginning. The person with $500 and the person with $25 million walk into the same bank. They are treated like they live on different planets, because inside that building, they do. The question is not whether the system is fair. It is not. The question is, what are you going to do with the information you now have? Subscribe to Michael Finance. New video every single week. No hype, no shortcuts. Just the truth about money that nobody else is telling you. Comment below. What level are you at right now? We read every single comment.